right. Hello, everyone, and welcome to another Pepperstone live event here to discuss smart money concepts, day trading, swing trading, and a little bit of volatility this week, Tyrone. My name's Thomas Atkinson. As always, I'm joined by Tyrone Abella, and what a vol moment we just had over the last 24 hours, Ty. Over 2% down the S&P, almost 3%, I think, on the NASDAQ, and of course, some huge moves on commodities as well, with oil breaking under one of the most key levels that we've seen over the last year. It's an exciting week to be in trading and a great time for us to be practicing some of the education stuff that we're going through today into the live charts. How have you been, Ty? And are you ready to talk about these markets?
Absolutely. Yeah, it's been a very, very interesting couple of days, hasn't it? Look, the US was closed on Monday, obviously, so we saw the ramifications of nearly a double trading day yesterday, didn't we? Big moves. I think even the Russell was down nearly 3%, which is a pretty big deal, as we know that's a reflection of the broader market. But look, currencies are moving too. I think everything's starting to move in the right direction. A couple of things we talked about last week happened for the dollar index and the euro and the CAD. So looking forward to jumping into all that and seeing what we can identify in what is a non-farm payroll week, we must remember.
Absolutely. There's still more to come. And that means that the volatility is probably not going away anytime soon. As we know, the jobs is all important now that the Federal Reserve has signaled it's going to do a rate cut. Will it have to do 50 basis points? Will it do 25 basis points? And just in general, when central banks start to change policy, this does huge things to the currency space that we'll talk about today. But let's start off with the US 500 here, Ty, because I think when it comes to smart money concepts, when it comes to understanding markets a little bit better, we've got to talk about the intricacies of making sure that you're really confirming your moves. So last week we saw a bit of a sell-off that came to an underneath low here on the S&P, and then it rallied kind of through the last three sessions and managed to get right up here to the peaking area. Now, it didn't quite breach the last high, and I think that if this had done one more green day, to me anyway, it would have been on in terms of a momentum move to the upside. We would have seen so many markets breaking out. It wasn't to be, though. That little bit of news that came through, and then, of course, now the DOJ getting involved with NVIDIA has caused, at this point, a flash sell. And it's moving down into what we like to always put on charts. If you trade indices, make sure to always be aware of where your gaps are. Now, Ty, do you want to talk through just to a beginner intermediate level what a gap is and why it's so important for us as traders and investors to pay attention to these levels in particular?
Absolutely. Yep. So a gap is when you get an open that is actually normally in a normal market, the open will be where the previous candle closed. So that's what you would normally expect. So that's why we get very even and clean patterns most of the time. But when we see a gap, what that means is that the next candle actually, and it doesn't matter what time frame it is, but the bigger the time frame, the more important the gap is. What you're basically seeing is an open that is actually disconnected from where the previous one closed. So you can see an example here on the SPX. You can see where the previous candle closed and then where the next one opens, there's a big gap there. Now that is, look, it's something that it is common in the markets, but the bigger the gap, often the bigger the volatility, of course. So most of the time, normal trading, you're going to see an open very close to where the previous candle closed. So the gap that we can see there is quite significant, as you can see.
Yeah, and you should just mark these on your charts. One of the little handy tips that I like to always show everybody if you use Pepperstone and the TradingView platform is you can actually go over and highlight these areas here on the S&P SPX, and it will actually overlay onto the other chart, so you can kind of see exactly where you should be putting your gap level. I like to mark them. I'll just quickly show everyone how to do that. Get a line. I personally use raise because then it doesn't go across the whole thing. A lot of people ask us, Ty, how do you set up the TradingView platform? If you're interested in us doing a session on that, maybe spending 20 minutes a session on that maybe next week, then let us know in the chat right now, and let us know in the comments on YouTube as well if you're watching this in replay, because that would be hugely beneficial to know if you'd like me to show you some of the little tips and tricks I use. Anyway, gap fill zone here, as you can see, horizontal ray. I've set it as a color, and I like to set it as whatever. For a gap, maybe I'll have it as a particular color. For a trend line, I'll have it as a particular color. For maybe big close points, I'll have it as a different color. And that means you can easily, we're very visual creatures, so it means you can easily spot it. Either way, we've got that there. Now, why this is important is we're starting to build a confluence level. And you'll notice here, Ty, I've got a couple of the key smart money concept tools that we like to have on the charts. We've got the anchored VWAP, which is a fantastic tool inside of the TradingView platform with Pepperstone. And you'll notice that that moves from the bottom up. And guess where it is? Right on the gap fill zone. And then we've got, of course, a 20-50 here in terms of moving averages. And we've got a 50 around that area. So another level of confluence is how we build a area that we're interested in. And you'll notice over here on the left-hand side, I've marked it out with a volume profile as well. So what I did there, and I'll just show everyone so you guys can see it, volume profile is an excellent tool, is in this case, a lot of the time what I'll do with volume profiles is I'll pull from the low to the high, and I'll find out where the biggest trades are. Now, I knew that there was a little bit of a trade in here. You can kind of see that small hump of volume that comes through there. But I'm also interested in how the market's traded around this zone in the past, because, Ty, we noticed that this has become a bit of an area of interest, hasn't it? So even though this may seem like it's the history of the chart, well, that's what we're doing as technical analysts, this is a really important level, isn't it? Because it means somebody was a net buyer there and a net seller there at one point. So there might be a net buyer again.
Absolutely. Yeah, it's a very, very important zone. And I think, yeah, just touching on the colors for the visuals, the more you can understand on what you're seeing very quickly, the less analysis you have to do. I think that's probably the key. Say with moving averages, for instance, like we always have our 20 moving average is always red, our 200 moving average is always green, and our 50 moving average is always blue. We don't even have to think about that red line because we know exactly what it represents. So if you can color code your zone, so if you've got a gap zone that might be green, and you've got a trend line that might be red or purple, whatever color you choose, it doesn't matter what color it is as long as it's meaningful to you. And if it's meaningful to you and you understand exactly what you're seeing, you can make very, very quick analysis decisions on a chart rather than having to try to work them out. I think it's a very, very important thing to really apply to your trading when you are setting up your chart. And I think it would be a great idea to spend some time setting up charts. I think it would be very beneficial for everyone, Tom.
Yeah, I'm pretty sure that I know I get asked that question a little bit. Even at a conference I was at last week, I got asked that question. How do you set up these charts? I want to know how. And it seems kind of basic to us that have been doing it for a while, but obviously it would be great to impart some of that knowledge. Hopefully you guys can learn some tips and tricks. So we build a confluence zone. What I like to do then is usually box it up, and you'll notice that the market is currently not at that level. Now, you may be wrong on these confluence zones, but once you start setting these up and you start setting up an area of interest, this is where a scalping / day trading / swing setup could be starting, because basically what you're doing is you're doing the work. Now, there's a quote I really like, Ty, that's it basically about the general gist of it is that in trading or investing or anything you do in life, you've really got to kind of outwork people. If you're a sports star, you've got to do, the work that's needed. But a lot of it's psychological game. Time in front of the charts in the trading game is not actually success. Instead, it's basically setting these charts up and waiting for the key levels. That's why we say patience, react, don't predict, words to live by in trading. So we've got this key zone. And if the markets came down to here, this is where we would look for reversal style signals. If we were in shorts, this could be ultimately where we'd start to say, okay, well, just before this particular box area, we might want to start removing our short positions. Is the guarantee? Nothing in trading is, but it certainly gives you a bit more of an idea. And what you'll notice is a lot of things are starting to synergize, Ty, because we had US 500 hit, and usually we'll talk about, actually we even go to dollar. We'll go to dollar right now because, of course, the US dollar has synergized one of your favorite zones. Ty, let's go through this one. I'm going to let you take it away because it's your favorite in terms of the level. So this was a massive harmony trade, wasn't it, in terms of we actually got very similar legs the whole way down.
Yes, it was amazing. And really, look, it bounced off the level that we expected it to do. So realistically, and we talk about it all the time. I mean, a lot of people say, "Oh, it's simple in hindsight that you just trade pullbacks and this and the other." It's actually not. You can see it in the here and the now. A lot of the time, there's not too many charts. Look, we do streams every day, Tom, twice a day, and you're going to be very hard pressed to find a day where you won't find some sort of a sequence of higher highs and higher lows, or lower high and lower lows on a significant pair or a stock that is playing that exact game. So it's not just a once-off. It happens all the time. And even if you just traded that sort of mechanism and you understood it, you're not going to go too far wrong. And that was just a perfect example. we saw this bounce off this level. We were very comfortable with that. And lo and behold, Tom, on a 2-hour chart, there it is. Higher high, higher low, pull back to a 20 moving average, and off we go.
Yeah, this was actually, you can go back and watch our last video on this. I think it was your trade of the week, actually, Tyrone, which was the double bottom / lower low break on, it was literally this time. I mean, what time is this? Yeah. It was right now, right here. So I guess it's putting it in place. We'd already worked out, this is the confluence technique we talk about. I actually have marked here important line. Now, you guys might not know why it's an important line, but of course, I've done a bit of work on it, so has Tyrone, and we know that this was around the area that we expected the dollar to find sell basically pressure. So the pressure would come off, people would take profit, and buyers would maybe come in for a bit of a relief rally. Now, because we'd harmonized this with multiple legs as well, so we'd come up with the idea that the market was probably going to be, well, it looked like it was kind of going in similar leg patterns on the way down. That we could actually then figure out most likely what the pullback is. And a lot of people use Elliott wave theory with this type of concept. I find, and so does Tyrone, is that if this makes sense to a lot of the key indicators that we talk about a lot, it often does work. And one of those is, of course, this red line, which is the daily 20 moving average here. And that means it's a bit of a key resistance as well for us as traders and investors. So key resistance, interesting point here for the dollar. We'll go to the 2-hour. We'll have a look at the euro in a moment, but there is another synergy with silver I want to go through. And you'll notice that it does look like it kind of wants to go short from here, or at least it's showing some weakness. We've got structure, creation, and we've gone on to a higher high. We've hit the daily 20, so we've hit that daily 20 moving average, and then we've found a sell. Then we've kind of found a few sells that have gone through here. I would probably look for a new low to be formed. So that is a new low. And if that does occur, then you're kind of looking towards, okay, well, maybe this is a resumption of that longer term trend. And eventually this will break and it'll stop working. But for now, it's at that key level. You're starting to see some resistance, and it looks like the market potentially does have a little bit of a sell in it. A critical point, and Ty mentioned non-farms, which is the jobs numbers this Friday. It is possible the dollar might actually even maybe even not do anything and sit around and wait for that non-farms to either break key up or down. I think there could be a trade before, which is happening potentially over the next 24 hours, and then there could also be a trade after the non-farm payrolls. Ty, I'm going to go with non-farms that are a patience, react, don't predict kind of day of trade, though.
Yeah, most definitely.
Yeah. Let's just do the natural progression here from the dollar over to the euro US dollar, because it's pretty much the combo you usually would use. And you'll notice here that the euro USD is showing something similar, a series of lower lows and lower highs as the market basically goes down. And you'll notice again, one of the moving averages kind of acting as dynamic resistance the whole way through here. In this case, it is the 20 on the 2-hour. And you'll find that a lot in currencies. Another little bit of a tip. The 2-hour, the 4-hour, and the daily with the 20 moving average can be quite good. And you can kind of see here, I'm actually going to just highlight this candle here, which is a fairly large rejection candle, Ty, that leads onto a lower low and also comes off this level of structure. Now, I think this is important because basically in supply-demand theory, this would be considered supply. Obviously, resistance traders would say it's resistance, and they are fairly similar things in many ways, and they obviously overlap a lot, which is to be expected. But notice there's that huge reaction. So I'm just going to zoom in on this reaction. And the reason I want to mention this is because when you see a big reaction like this, it shows you someone was really keen to sell this. Now, if the market changes dynamic and goes towards the upside and goes above that, that can be incredibly significant for traders and investors, couldn't it, Ty? Because it's basically showing that, okay, it's ready to go up now, and this is a big momentum shift.
Yeah, and understanding these moves is really understanding when to stop trading the downward trend. Like understanding the change, Tom, I think is really important. A lot of people fail in that aspect. Like they can join a trend and trade the pullbacks and go in the direction, but understanding when that party is kind of coming to a close and potentially time to actually turn and go the other way is a really important concept, because not only do you not leave as much on the table, but you get in early on the next big move. So it's very, very important.
I just want to quickly confirm that someone else can see that we've switched screens. There's just someone viewing on an iPad saying they're stuck on the US 500. So I just want to make sure it's continuing on. It should be. Everything looks good on our end, but I thought I'd just check on that. I want to move over, Ty, to silver. And I just want to talk about silver because silver's a really good case of why you've got to be so careful. In particular, why you've got to have your key levels marked out. So I actually had this level for silver. And I also had this level for silver. And you'll notice I say I also had. So originally, I also had this level for silver. So silver's actually offered 3 potential trades here. The first one, great success, went on, obviously hit first TP, might have broken even some, tried to leave some on for a run. The second one comes down, it hits this level. And I'll say it right now, there is actually, in my opinion, quite a good replication trade. Of course, you can always say, well, coulda, shoulda, woulda, maybe I could have done this differently. But I think it's enough odds there to say that there was a decent smaller time frame trade here. And basically underneath the hood, there's a very decent trade, but it still failed. And Ty, this is trading, isn't it? Sometimes you are going to lose, and you've got to recognize this is why you don't want to leverage up like, oh, this is going to be the one, YOLO, that kind of thing. You want to be in it to win it, I guess, long term. And more importantly, you have to get 40 replications under your belt. I talk about this when I do speeches, and I always chuck this slide in, and I say you've got to do the 40 reps. Why is this so important? Well, of course, when it comes to 40 reps, you've got to think about most humans give up about 10, 15 in Thai because we have like a couple of bad trades, ruins our confidence, and we give up. We don't even know our stats yet. So it's psychologically proven that around 40 is the number you need to get to. And once you have that, you've got a good body of evidence. So there's actually a failure here, but if this fails, guess where it goes to? More than likely here. Why? Because there's nothing in between this area that's going to hold silver up. And this can be incredibly powerful. It fails, you know it was good. You could even go to the short end. When it gets here, now you say, okay, wait a second, I need to pay attention to this. Such a powerful concept, isn't it, Ty? You shouldn't do anything in the middle of nowhere land unless you're already in that direction.
Yeah. Absolutely. And I think it's also really important to make sure that you don't get caught in the trap of thinking, especially in the realm of silver, that it's going to do exactly what gold does, because it's not always the case. They are trading very independently and don't always expect. There are correlations in the market. Look, there's no question about that. And sometimes you're going to see a very close correlation of the two. But if you look at gold looks like a very different chart to silver. I'm sure we'll get to gold in a minute. But it's fighting for dear life to hold at a level, but it's at a very strong level. Whereas this one did break down. And is it a precursor to gold coming down? Well, I wouldn't have thought so. I wouldn't normally use silver as the leading indicator for gold. But people can make the mistake of thinking one will do what the other one does, and that's not the case. So just be careful to understand correlations when they're working, and probably more importantly when they're not.
So here's an example of silver at our most traded zone, which is obviously a volume profile work. We've got a 61.8 fib. The golden ratio fib is always a solid one between the GAN number and the 61.8. And so I call it the golden pocket, Ty. And I think that's its technical term as well. But here we have some form of base. Now, you're always going to know as a technical analyst, whether you're a scalper, day trader, investor, it doesn't really matter, that when you start to see a reaction around an area you've already picked out, oh, I love it as a trader and investor. I just feel like it's the greatest feeling to know that you've analyzed the charts correctly, to see that the market has gone bang into that area and started to respect it. And that means that you're on the path of finding true success in trading and investing, because you are starting to spot where the big banks have their positions. And that's what we're doing. This is position-based trading. This is finding those big zones. So you'll notice there's a bit of reaction here. This could lead into some pretty decent scalps and stuff. Yes, okay, at the moment the trend is down. So swing traders are going to want different things to a scalper. A scalper might say, well, this looks double bottomy. We breach here. We go up into 2850-ish. This is the area that I'd like to potentially take some profit. A swing trader, however, is going to look for the market to get above these highs. So a swing trader is going to be looking to get back above this supply, back above this high, and to change the trend, aren't we, Ty? So still the same level, just totally different activations of the trade.
Absolutely. And notice how the same things that we're talking about and covered across all these charts are replicating even on a silver 2-hour chart. You can see, similar to what we saw previously on the euro, we're waiting for a bit of a change of direction here, and it may well come. But are we jumping in? Absolutely not. Does it look like a double bottom? It does. Are we getting in right now? Absolutely not. It's got a 20 moving average. It could turn around and continue selling off very, very quickly and very easily here. And that will leave you holding the bag. And no one wants to be holding the bag. So, yeah, realistically, it's very, very important to wait for price action to do what you needed to do, get above that moving average, print a series of higher highs and higher lows off what you already know is a base. You don't need to be the first person in the party, Tom. You just need to be there when the party's really cranking and out before the police come. So that's really what trading is. You want the meat of the trade. You don't need to be the first guy in. You certainly don't want to be the last one there either. So wait for the momentum to shift. Having momentum on your side and proofing of a level holding, and not only holding, but actually starting to move in the direction that's favorable to your trade. Although you may not get as many points or pips, you're going to get the more quality points or pips, and that's really, really important.
But by also correctly identifying this zone, Ty, we know that this would not be an area that we'd want to place a heavy short, because we already suspect this is where some kind of position is. So again, if you were shorting into this zone would have made more sense. And I think that's something that a lot of people overlook. They might say, well, it's counter trend. Well, firstly, we want your momentum you're talking about, but also we know it's the key level. It's the zone of equilibrium. It's the next zone where positions might buy up. Now, you may notice on the right-hand side here, Ty, that everything's red. It's a sea of red except for the VIX and oil. Though oil was brutally down over the last 24 hours. Let's just quickly move over to gold. We'll talk about gold because, as you mentioned, it's holding up better. Daily 20 moving average, holding on for dear life. A bit of a respect of the last 24 hours. You've actually got an alert here at 25.08. I want to see this thing hold this level and bounce past this zone. I want to see that momentum come back into the shift. If that's not happening, you're just kind of buying blind, I feel. And you might say, well, look at that rejection. I don't think that's even enough. You know, historically, just having a hammer is on a 2-hour is not going to do it, because you're going to need more than that, aren't you, Ty?
Absolutely. And it's holding on for dear life. Look, and it's got a bit to hold on to. I think 24.80 is a really good level for it. It's got a 20 moving average. It's also a roll reversal zone. It's had resistance in the past. So we know this level is really, really important. Are we waiting for reaction? Absolutely, we are. But again, you don't want to be the I want to see the momentum shifting. I want to see this level hold. In fairness, you know, we don't really generally wish or hope or pray for anything. But my bias for gold, I would prefer it went long. I would like to see it continue long. I want to see it go long. I want to see.
I thank you for your service to make gold go long.
I think that it's independent of the indices. Okay, look, and it comes back to that correlation. There are times when gold is running exactly like the indices are. They sell off, gold sells off. But there are other times when it does the opposite. Okay, so if you look at gold on a chart, it doesn't look short to me. And realistically, but this level doesn't hold. In saying that, on the higher time frame, this level does. It's a very, very important level. It's a bit of a do or die level for it, I feel, because if it does break down from this point, it is very possible that we might find ourselves back at sort of that 22,300 again.
Yeah, I think there is. Look, I do have some warnings on the higher time frames that gold's in a bit of an overbought. You can see here again the warnings that start to show up here. And this just means overbought, basically, guys. That's all it's really showing you. And at the moment, we're consolidating. But just remember, it doesn't have to go down, because the most important thing in markets is time. And when markets want to reset indicators, you ever notice when you put a stochastic or you put any of these oscillators on, the market can sometimes just do this, and it goes sideways, 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 and then it breaches out. And you think, oh, it should have come down. It's overpriced. You know, that's always the thing retail traders say. Remember, a pullback in time is just as good as a pullback in price. Maybe not to our psychology, but burning time is what markets like to do. And when they do that, they reset the indicators, don't they, Ty? So it can go sideways and reset almost every indicator from overbought to oversold, and not even move barely down.
Absolutely.
It can do it.
Absolutely.
All right, so gold, right at key level, looking for more momentum in terms of the upside. If it doesn't hold here, I think it'll move to 24.50 and maybe even lower, as Tyrone mentioned. All right, let's go over now to oil. Oil was bad. And like usual, you really want to be, oh, look at that. It hit my little blue line that I had in there. So this is, again, why you do have those little kind of alerts. I must have got that on my phone before. So these are just levels that I've marked out, and you can easily see what this one is. It's just marked based on this last previous low, and you can see it's come down and tested that area. And again, a scalper might be looking at that, a real scalper, like someone that's in a 1 minute chart, and they're going to actually be looking at these that doesn't happen every day, but these incredibly low, out of the ordinary areas. Is oil oversold? Possibly. I don't know yet. It's just a little bit of analysis there. But as you go down, I'm actually going to go down to a 1 minute chart here, Ty, getting down dangerous with the charts. And you'll actually notice this actually does have a scalp on it. If I was scalping this particular trade, I would scalp it off that level there. And I probably would have been out around here because the market's come in with structure. It's hit my key zone. It's shown a little bit of a turn on the 1 minute chart, and then it's rallied back up. Now, that doesn't mean you could leave a runner on if you wanted to, but you are counter trending. So this is the type of thing that I'd look for, though. You're going to lose this, probably even a coin flip at the time. So you've got to make sure it pays off. And what that means is that if you think about it, if I took a long here and I placed a stop loss underneath the low and I took profit, let's say here, I'm making a 1.3 to 1. Now, even if I was just coin flipping, and it might be actually 60% chance, this is a fairly solid level. That's why I marked it out. But anyway, there's a few reasons for it. This still is profitable, even if you were coin flipping, isn't it, Ty? If you could get enough of them and you could take hundreds of them, you'd still be a winner. So
absolutely. Yeah, it's very common.
You just want more than 1-to-1. Yeah.
Yeah, absolutely.
Anyway,
that's very important.
With oil, ratio is crazy. Anyway, with oil, the key is going to be, I think, in the weekly and seeing how the market structures down here. I would say to stop a freight train like this often does take a little while. So I think with oil, because it's been such an aggressive move towards the downside, for now, the bears are in command. I've got some watch reaction here levels at 66.90, which I think would be an interesting zone as well. I'm not convinced at all that this is necessarily over, like in terms of the sell. Ty, do you have any opinions on whether you think oil is going lower, is it going to bounce, or is it just too early to tell?
I think it's a little bit too early to tell, but any more selling on the smaller time frames, and I think 68 is very likely. That's a very strong
68.
Zone,
yeah, 68, 67, quite strong. Also, check out UK oil as well. You may want to look at Brent inside your Pepperstone TradingView platform or MetaTrader 4 or whatever you're using, because Brent and US oil, sometimes Brent will give you a cleaner setup. You can still trade US oil if you want to, but I find that using both and watching them both is a great top tip for scalpers and day traders. From oil, we need to go and just quickly talk, I think, crypto here, Ty. We'll just go to Bitcoin for a moment. So Bitcoin has been, I would say, a little bit weaker than I probably would have expected. It has had one major fail, I believe, which is not so much that it came up here and tested this supply, because that was fine. I think it's actually a fail in here where it should have found a buy. So similar to silver, I would say there is a decent little long in there. If you go in and you have a look at the small time frames, that was either a break even or just didn't quite get to even a break even, unfortunately. And it's since then dropped. I do have signs that are saying it's oversold, but I don't have signs saying this thing has turned yet. And you'll notice we've got alerts above these areas. Notice here as well on the daily, and the reason I'm on the daily, even though we'd be scalping and day trading this thing, is because if this closes above 60,000 on the daily, that will be the highest day close. That's going to be pretty key for Bitcoin. So at the moment, Ty is going to say it and everyone's going to say it. You've got to remember the overall trend is down. Why? Lower high, lower high, lower high, currently lower high. So there's no breaches to the upside. That means that swing and big based investing is just not there just yet. So it's smaller time frame work, I think, on crypto, or if you're trying to hodl and buy big positions, well, you're gonna have to make your own calls on that. But 60,000 is the level for me, Ty. I want to see a close above.
Yeah, absolutely. I think that's a really, really good level. Um, yeah, look, it's an interesting one, isn't it? Like it's been promising a lot and delivering not very much actually. Bitcoin, it's
Mm.
threatened to go lower. It's threatened to go higher. Um, it's keeping everybody guessing, isn't it? And I think that one move up is only we still believe that there's more in it. I think that everyone's well aware that if it gets past that 72, it could do anything.
Mm.
But it's certainly making hard work of it. it's, it's making very hard work of it, isn't it?
Yeah, I think with Bitcoin, it's just you've got to just make sure that you realize that every time you go into it, you're doing a rep. There's going to be wins, there's going to be losses, and at the moment, it's not like a clear long buy or anything like that. So you've got to be fast and nimble. I'm
Mm.
being a lot quicker on the Bitcoin trades at the moment. If I'm trading it and if I'm hodling it or whatever, then of course around here is historically so far been an okay buy. But you know what? If it gives up this area, major support that I've got marked out here is 42.5, so it could get more nasty. You know, your seasonality with Bitcoin as well. September is not a great month for the markets and not a great month for Bitcoin either,
No.
traditionally. Anyway, we'll have to see. Now, when the VIX is high, Ty, I just guess it's always good to have an alert set for the VIX. When the VIX is above 20, you do need to pay attention to that. So, of course, we are above 20, which means it's great for scalpers and day traders and everything. This is when you want to come out and get those faster moves. So that opens up quite a lot of currency trading as well. So I thought we'd just kind of go through a few currencies that maybe you guys in the chat would like to have a look at. And Ty, do you have anything that you think is like the trade of the week for you in terms of just like the technical analysis setups and learning stuff there?
Yeah, I actually think that from it's actually the US dollar yen actually. On a daily, it's looking like it wants to go lower again. It's gone up. It's doing all the things that we've just talked about actually in
Mm-hmm.
terms of going up and testing the 20 moving average. It's trying to roll over again. I'm keeping an on a very close eye on a break below 144. I think it has failed to break past the 20 moving average again on a daily, and if it does happen to get past that 20 moving average. Sorry, if it happens to maintain its level underneath it and we get past that 144 level for daily close, I think that it really opens itself up to a move down to that very low 140, so around that 141-ish area, which is a very strong level of support.
So like an equilibrium move potential of close
Yeah,
underneath here. Let's say we start to see the weakness in the US dollar come through in the DXY, which we suspect could be there based on the daily 20 itself. Then all of a sudden we could get stronger yen, therefore US dollar yen actually dropping off to 141. So this would be a fairly fast move, you would think, because the yen's fairly
yeah.
aggressive at the moment. Interesting point. Probably going to happen after non-farms if this is going to occur.
Yeah, exactly right. Yeah, I think that's probably the key there. Patience again. I think you got to be very patient about it.
Yeah, patience, react, don't predict in this case. I think for me, the key is probably going to be the dollar. But I thought I'd also, why not just like, let's have a look at I mean, I like the US 500 level as well, because I obviously alerted quite a lot to that. So I'm going to say, I'll just bring it back onto the charts. I'll just kind of set up here the US 500. This level is super key to me. I feel like there could be a buying pressure around here, Ty, gap fill, options low level today. I expect it to be an options level in general. It's a decent amount of puts that are sitting around this. Actually, people starting to add big puts over the last 24 hours. That will accelerate, I believe, today as the VIX has gone high. And when you get a lot of puts in the system, that's a lot of options in the system. That can also act as a stabilizing level. So there's a lot going on for this area. I'd be looking at smaller timeframes to see whether there are any change of trend kind of actions around there. And I've noticed people are already calling for 4,000s again on the SPY tie. It's funny. The people that are really negative on markets really want this recession. And
Oh, they
I
love it, don't
believe they're
they?
going to
Yeah,
get one, but I don't think it's just yet. You know, the central banks have only just started to potentially cut here, as in the Fed. 25 basis points, I'm not too terrified. 50 basis point cut in September. Ty, would you be scared of that one if they did a 50?
oh, yeah. I don't know. I don't think they're going to be that aggressive. I
If
don't
they
think they're
were,
going to be
I'd
that
be,
aggressive.
I might go hide for a little bit. No, I'd
Yeah,
probably be getting shot. But yeah, 50 is very dangerous, and that would
yeah.
show that they're panicking, and you don't want
Yes.
to see a central
Yeah.
bank panic.
No, I wouldn't have thought so. No, I think that'll be. It's a big, yeah. But look, you never know. Hey, look, stranger things have happened. It is an election
Mhm.
year.
Absolutely, it is an election year, and that's also going to enhance. It really increase the vol moving forward as well. A bit of a shout out as well. If anyone is in Melbourne or Sydney, we're actually doing a couple of conferences soon as well. So if you're interested, stay tuned for that, because I think we've got the date, don't we, Ty, for Melbourne, October the 9th. Pencil it in for anyone in Melbourne if you're interested in coming along, and we'll get some details for that next week for you guys. So if you're interested, again, for Melbourne, Australia, and Sydney, Australia, definitely consider coming along to the event.
Yeah.
All right, that'll be awesome too. We've got some good things planned, some special stuff. All right, let's go into the next thing here, which I guess, Ty, is a question about a stock, and I would have always expected this stock to come up today, and that's NVIDIA, probably the most talked about, at one point the world's richest stock. This thing is in free fall. There are some problems here. It's not just TA. Now, TA level, I like it. I already had it marked. In fact, I have literally this level that's pretty much here today marked out, and it hit it after hours. So again, nice to see the correct levels kind of reach. Once it got underneath 116, 115, this was pretty likely to happen. Now that we're here, though, I hate antitrust from the perspective of it does create a lot of uncertainty about a stock. Now, the only thing I can really correlate it with is Google, because Google is also suffering antitrust issues. And you'll notice that while the rest of the market is all mostly recovered, Google has struggled a lot with Tyron's favorite, the 20 moving average. In fact, that actually held Google down. And this was actually a cautionary tale. A few people said, is Google time? Is Google time? I do like Google as a stock. I think it's a really great stock, but it wasn't able to activate the longs. So while the rest of the market was recovering recently, Google was really suffering, and it continues to do so. It dropped 4%, while the rest of the big stocks like Apple dropped 2.7, Amazon dropped 1.26, Microsoft, one of my other favorites, 1.85. So you've got to take this into consideration. I don't think it's like normal news, Ty. Antitrust is a big deal, and it really dampens growth mood, doesn't it, on stocks? I mean, we've barely ever seen it in our trading career.
No, I know it's a bit of a it's a big deal. There's no question about that. And how these stocks are going to be able to, I think, deal with it from the perspective of investors. Investor sentiment is probably the thing that would be the biggest concern.
It's not like Nvidia's cheap either. It trades at 45 times forward earnings, so it needs growth. And there's even some people now uncovering all sorts of things about what they think about inventory. But anyway, it's not a fundamental podcast or live show here. But I would say from a TA level, this is a very critical zone. This is pretty much where you would expect a bull to try to buy the dip in terms of show some sort of movement. Again, patience, react, don't predict. Make sure you have systems on your smaller time frames. These are just key levels that we're marking out here today, just to kind of show you how we get to some of these key levels. But yeah, I think the antitrust is not just like normal news. If you said, oh, it's data or something, well, that's one thing. But this is obviously some extreme news coming out. All right, well, that kind of brings us to, I think, the questions that we had there, Ty. So there was one on that, and we've got actually one more here on Tesla. So let's have a quick look at Tesla. And they say, well, with good news from Tesla, is it looking good on the charts? Well, Tesla's a tough one because it actually should have been doing better yesterday, and it just didn't quite do it. So you'll notice here that we have a series of lower lows and lower highs, and then all of a sudden that changed and actually went to a higher high. Now, I think that's not a bad sign for Tesla. It has been making a series of higher highs and higher lows. For me, Ty, it's just really got to hold above this 205. It's so important it doesn't drop that.
Yeah, I think it's a very pivotal zone for it. A break below 205, and I think it opens up to all sorts of nastiness on the way down. Yeah, 180, 160. It turns quite ugly after that.
Yeah, I agree. It really needs to hold this week. 215, massive amount of options as well. So if you get above 215, the market momentum starts to go in that direction, then that could be also a positive catalyst for it. All right, guys. Well, always thank you so much for giving us your time today. We hope that you learned a couple of things, some smart money tools that I guess you should be thinking about putting on your charts. Anchored VWAP, fixed range volume profile, and volume profile in general. Also think about session volume profile. It can help you out a lot. And then on top of that, you want to be thinking about the 20 moving average, the 50 exponential moving average, and the 200 simple moving average. All of these can help you to define your edge, define where markets are at. And you can't forget the Fibonacci at the time, one of the most important indicators. You've got to get that on your charts. Remember, keep it simple. We're not using too many random indicators here, because what you'll find is that you're looking for the big guys levels, and this will start to make you recognize the key zones.
Absolutely. Well, thanks so much for joining us, everyone. Have a fantastic week. Don't forget, non-farm payroll, trade carefully, and we look forward to seeing you at the same time next week.
All right. Thank you so much, everybody. Bye for now. See you guys.